Hey, what's going on, guys? Welcome back to a brand new video here on Wealth Academy. My name is Gibmoses, and in today's video, let's take a look at Litecoin against the USD in the long term. So, if you have been in the channel for the past couple of months, you know one of my strategies when analyzing my charts is looking at our previous fractals from 2017, 2014, and applying it to the present fractal. So if that's the case, does that mean that Litecoin is still copying the same exact fractal as 2017? And of course, I'm going to be spicing it up with some harmonics because as we know, harmonics are very powerful in this market. So let's go ahead and draw our trend line right over here on the 2017 chart. And let's go ahead and do the same exact thing in the present fractal right here. Bingo, just like that. And right over here, I'm going to go ahead and take this pivot point all the way to this pivot point right here. And we triggered the 186 in the 2017 fractal, which gave us our top. So same exact pivot point all the way down to the bottom. And right over here, we triggered the 186, just like what happened in 2017. That's how we got our top. Keep in mind, when we do fractal method, it doesn't matter what happens in between, okay? So it might look the same in between, it might not. It doesn't matter. What matters the most, we're triggering these same higher high levels, such as the 186 and the 186. All right. What happens in the middle, I don't care, okay? So right over here, I'm going to go ahead and do the same exact thing from top to bottom. And right over here, we triggered the 2.618 Fibonacci level. Let's do the same thing with this fractal, top to bottom, just like that. And right here, we triggered the 2.618 as well. So what does this tell you as an investor? Of course, we're going for the same exact fractal as 2017. So right here in 2017, Litecoin built a nice bullish harmonic, just like that. And that's what gave people an indication that we still have ways to go up. So looking at our present fractal right here, the same thing is happening. We have a bullish harmonic. You can go ahead and search it up, a bullish shark, and it meets the requirement. All right, bingo. So if we go sideways for a few months, it doesn't matter. You remain accumulating, you do your thing, accumulate, remain patient, because the patient ones are the ones that will get rewarded the most. Our fun from our first wave is over. We made some great money throughout this cycle right here. Right now, it's a matter of patience. This is where you do your thing, accumulate here and there, open some small, long positions. If you're working, 9 to 5 or whatever it might be, you're running a business. Here would be a good time to be, laddering in, placing some long positions for the long term. Because let me tell you, looking at such technical analysis on a bigger time frame, which is on the daily chart, when we have major pullbacks like this, we tend to go sideways for a bit. So the bigger the pullback, the longer we're going to go sideways. Right over here, we had 60 days. I mean, I can go on forever. All right. Right here, that COVID pullback, we went sideways for 130 days, 70% down. It went sideways for 128 days. Right here, that's exactly what happened, 72% down. So 100 days, if we go sideways, I'm not going to be surprised. I'm going to continue my thing, placing my long positions. So as a technical analyst, this zone right here, to me, this is where, this is accumulation zone, okay? Even if we drop to that $80 mark or $85, this is still accumulation zone where you remain accumulating. I'm not selling. I remain accumulating, placing my long positions for, the coming months, because as we know, we're in fourth wave and we still have another wave to go up. So Elliott wave wise, we have our 1, 2, 3. We have our fourth wave bottom. I don't know if it's in or not. That's one thing we're gonna find out together. So fourth wave anywhere within this yellow box. And then we still have our last wave, which is going to be our fifth wave, all the way to, let's find out. So first extension is going to be at the 656. Second extension is at 1,000. And it can go on to the 3.618 to 1440 and even the 4.618 Fibonacci level at 1800. We're going to stick safe and see how the 1.618 at $600 reacts. If it breaks through, then know that we're heading to that $1,000 mark. However, right now, this is way too early to, be analyzing. However, this is me just giving you an idea of what's going to happen in the long term. Accumulating at this range is worth it, especially when you look at the the risk to reward ratio. I mean, if we drop to $80, all right, compared to what's coming in the coming months, I mean, you're looking at about 400%, okay? So this is a good risk to reward ratio. This is where people, are fearful. They think that we're going in a bear market, the market is going to crash. I don't think so. We still haven't completed our fifth wave. And looking at Bitcoin, it hasn't triggered bearish levels. Therefore, there's no reason to be bearish on my radar. So let's see what happens. I'm excited for what Charlie Lee, the CEO, has for us, what the algorithm is printing on a Litecoin. If I have any updates, I'm going to go ahead and update you guys here on Wealth Academy. So if you haven't done so, make sure you hit that notification bell icon, hit that subscribe button. And if this video helped you out, hit that like button. And I'll see you all in tomorrow's video.